Okay. Hello, everybody. We have today Michael Donaldson. Mike is a top agent in its field in Central Florida. And we're going to dive right into it. Mike, tell us about yourself.
Sure. I'm a vice chair with Cushman and Wakefield based here in Tampa. I cover multifamily investment sales throughout Central and North Florida. Been in the industry 19 years now. Sold about 90,000 units, throughout my career. And
90,000 units.
yeah,
Nine, nine,
uh,
nine
it,
zero?
it goes fast. Yeah, 90,000.
Wow.
So.
Man, I'm proud of you.
Yeah, got to see the industry really change and the evolution of the markets over the years. And yeah, I co-lead the team with my business partner Nick Mioli,
Very nice, very nice. And you're in Central Florida, right?
based in Tampa. Yep.
Yes, in Tampa.
Our geography covers all of Central Florida, so Tampa, Orlando, Jacksonville, Southwest Florida as well.
How many billion is that? Would you say 90,000? More than millions. I mean, hundreds of millions, 2 billions.
Yeah, I think we're, probably over 3 or 4 billion. So
So
yeah.
it's comfortable to say that you're a billion dollar with a B producer.
Yeah, we've definitely been involved with several billion dollars worth of real estate transactions, all
Mostly
exclusively multifamily.
multifamily, only multifamily. Why multifamily?
It's funny because when I started my career, I was an intern, and I was actually more interested in retail because it was just something that you see. You see stores, you go to stores. So to me, multifamily was really a foreign concept. I lived in an apartment complex when I started in college, and I was like, who's buying apartment complexes? But the
Right.
more I learned about it, I saw there was, tremendous demand to rent, and everybody needs a roof over their head. There's significant demand, for rental housing, just given the lack of or inability for folks to really gain home ownership. So it's been really interesting to see the trends over the years, but I couldn't see myself, doing any other product type. I mean, it just, you lose one tenant in retail, you can lose, 100% of your income
Agreed. That's
versus,
right. That's right.
mul-
To an audience. Agreed.
yeah,
Agreed. Absolutely.
yeah.
And
So to me, that was like a big differentiator.
you find that in the multifamily, you have the same buyers over and over again, and the same sellers
Yeah.
too, for that matter.
Right. Yeah, it's a small world in the industry here, but yeah, we have a lot of repeat clients. They've been doing this some for, 40, 50 plus years, and you know, probably feel the same way and share the same sentiments as us, just it's a preferred, product type, always maintains high occupancy. The trends are favorable, and the rents can be changed, quite frequently, as opposed to, a longer term lease and retail where, you're waiting every 5 years or so.
Right, right, right. Now I know that obviously, you help us a lot, a great deal. Thank you very much. I made money with you, a lot of money. Okay, let's not sugarcoat it. You're great, okay, and you also are very patient for that matter, and you connect with your people, which is really important. You're not. I don't think you're not just call it pepper pusher. You know what I mean? You connect with your people, you give them what they need. Some broker, they just say, okay, here's the property, sign over here, and goodbye. I'll see you at the closing table. That's not you. You show up every time there is a tour, whether it's the lender, the appraisal, the inspection, environmental, engineering, okay? You're always there. and you always answer questions. And by the way, you have a great team behind you too that provide document. I believe Lisa is her name.
Right. Our
Lisa,
transaction coordinator,
right?
Lisa. Yep.
Great. She's great. She's always available, even in the weekend and after hours. Okay, I'll be getting emails. Okay, nonstop because she, you know what? She's on the job. You know,
Right.
they
Yeah.
understand
She's a real resource to our team.
times of the essence. So, when the buyer come in and type property, they need documents, right? And time is of the essence. And you guys don't wait for, if I ask for document on Friday, you don't wait till Monday. You give it to me right then, or even Saturday, over the weekend. And that speaks very well of you, Mike.
Appreciate that. Yeah, we strive, for us it's all about relationships. I mean, anybody can do a transaction, but to get repeat business, there's no shortcuts, right? You got to do it right. You got to be there. You got to be present.
Right,
You can't ignore requests.
right,
It's imperative to send things over, quickly as possible. And so, yeah, we've always strived to be a team that
right,
does everything the right way.
right. And today's market now, we are 2025. Obviously, post post COVID market was very strong. Okay, do you see that a lot of buyers are coming back?
Yeah, we're really encouraged by what we're seeing this year so far. Out of the gate, we've got 11 deals actually on market or coming to market soon. And the buyer pool has definitely expanded. I think buyers are feeling like we're past the bottom, we're past the supply peak that, Florida has really exploded over the last couple of years in terms of new supply. So we're just getting to a point where buyers are gaining more confidence that we're going to, get to some greener pastures in the market. We're going to start seeing some real tangible rent growth again. And so, yeah, the bid sheets are, 20, 30 buyers again. It's starting to feel like old times.
Hmm. And do you work on off-market deals or just only market deal?
Yeah, we listen, as a agent of almost 20 years here. I mean, we always try to go to market just because it yields the best results for our clients, but there's circumstances where it may not make sense to go to market. Maybe the property's not performing the best, maybe the seller doesn't want publicity. There's a number of reasons why we might do something off market, and so we do some off market transactions, but we work with groups like yourself that we know can get a deal done, have a good track record. Um, because if you're only really getting one shot, you want to make sure you're working with a buyer that can get it done.
Right, right. So people always ask me, okay, I don't buy any, I only buy off-market deals, for example, okay? And then another group, no, I buy market deal. And the answer is it doesn't matter. It's all depends on the price. Why am I going to overpay for off-market deal where I can buy it market deal in a market deal? Does that make sense?
Yeah, I mean, listen, I
It has to
think
make sense.
yeah, it makes sense. I think buyers, we get a lot of requests for off market, and naturally you would think that by getting something off market, you're getting, a pretty good deal. Not always the case. I'll say that you know, sometimes we have a number that the seller wants on an off market basis, and it might be, you know, pretty high, right? And you know, if they don't get that number, they're not selling. Versus if we go to market, I bring 30 offers, let's say the price comes in a little less, a little more, what have you, that the seller knows at that point that, um, you know, they've heard from the market, they're taking the best bid. So listen, I think you should be looking at all deals off market, on market, and not get discouraged by, maybe 20, 30 other buyers
Agreed.
also competing,
Agreed.
it's not the right mentality.
It's the same thing where people ask, for example, when is a good time to buy? Is it today a good time to buy, or last year a good time to buy, or should I wait for rates to go down? So the answer is simple. It's all in the deal.
100%. There's good deals anytime, any
Right.
market. We're selling a lot of deals for, long-term owners that have had a property for 20 plus years. I
By the
think
way,
that's
I love
always
these
going to be a
deals.
good
I
opportunity.
love those deals.
Yeah.
Right.
I mean, those are always going to have significant upside, and you can make sense of them in any kind of market.
Right. And you focus mostly in Central and North Florida, or just Central?
Central and North Florida. The
North Florida.
majority of our deals
Right.
are I-4 corridor, Tampa, Orlando, but we do a lot in Jacksonville, Tallahassee, and even down to Fort Myers, Naples.
And I gotta tell you, you're on the money because I preach to my audience. South Florida is already played out. Very difficult to find a good deal in South Florida, not to mention the insurance cost. And I believe the trend is Central to North Florida.
Yeah, we get a lot of buyers coming from South Florida,
Hmm.
to Tampa, Orlando, and Jacksonville, and they like it because they're getting a better yield. Typically, our cap rates are higher. We are seeing more favorable insurance costs. Maybe it's around 1,000 a door
Right, right,
versus 2 or 3,000 a door. I've
right,
heard recently in
right,
South Florida. So it's a lot more palatable. I think we also have maybe a little more rent growth. Traditionally, we have little subdued lately, but we're bouncing back. But yeah, I think Central Florida has a lot of advantages over South.
right. And I'm going to tell you one more advantage, okay, that you can use too when you. I don't think I need to tell you what to do. You're great, by the way. You're a top producer. You're a $1 billion producer. But it's always good to have a tip. I always look for tip, right? So what makes your market better? It's simple. Let's say you sell a property and the average rent is just throwing a number, $1,500, right? It's easier to go from 1,500 to 1,800, yes, because it's not that much. South Florida, if you sell a property, average rent is 2,500. It's that much more difficult to go from 25 to 2,800. More people are in the working force of the mid 1,000. It makes sense, as opposed to closer
Yeah,
to 2,000, and that's a very big plus, if you know what I mean.
yeah, that's a
That,
great point. It's
that by
all,
itself, by the way,
relative.
that by itself, I'm coming to Central Florida. Think about it.
Yeah, it definitely opens up your buyer pool, especially in this kind of environment where folks are getting more price sensitive. So that also speaks to some of the demographic and population trends we're seeing,
Right,
where a lot of population is coming out of South Florida and coming to Tampa, Orlando, and
right,
other Central Florida markets where the cost of living is so much less.
right.
They can afford the rents, they can afford the general lifestyle.
And believe me,
uh
right. I don't want to go to. We have properties Central Florida, Tampa, Orlando, Gainesville. Okay. I don't want to get out here. I want to see my penthouse, okay, on the beach. But you know
yeah,
what? I have to think outside the box sometime, and it's okay because that's where the money is.
yeah, absolutely. You shouldn't be afraid of investing in a market that you're not necessarily living in.
Right. It's all dollar and cents. We don't buy property because we fall in love with them. We fall in love with the family, right? And children. I see you on Facebook all the time, by the way. I feel like I know you. I feel like you're my best friend.
We are friends.
Right. No, but it's all about, property, it's all about numbers. It's not about, I love the location or I love if the number makes sense, you move forward. And
Yeah,
unfortunately, for South Florida, it's very difficult to find numbers that we are looking at some stuff in South Florida, but when you look, because we are local and we live in South Florida, boots on the ground in South Florida, we will be more flexible in the pricing wise when it comes to South Florida product. But
right.
again, it needs to make sense. We like to go with the 1% rule.
Yep.
You know the 1% rule, right? For example, if they're asking, let's say 300 unit, asking 200,000 per door, I want to make sure I'm getting right now, I'm getting close to $2,000 a month. Not
Right.
pro forma.
Yeah, I mean it's a hard and fast rule. I probably the majority of my deals don't meet that criteria, but that's where I call you and let you know, hey, Eyal, I know the
Right,
in-place rents don't make sense, but if you do X, Y, and Z, you get the rents up,
right, right.
$200, $300, it makes a lot of sense. So
It's
always a
also has to do with
story.
supply and demand.
Right.
If you don't have the supply, you're gonna have the demand. People are gonna pay. But
Exactly.
we are very careful because like for example, we had an exit of 3,000 units, right, post COVID. I would say one community, okay, about 90 units. We didn't make money on it. Only one community out of 3,000 units, and even that community, 90 units, we didn't make money. We we took the money, we lost money, but we didn't lose yet because we went to another property that's still
Yep.
working, okay? And the reason is because community, listen, 200 unit, 300 unit, okay, they're much easier to, in a sense of managing it and property management and to expense it out and the pool of buyers. We always want to know what is the next buyer going to look for. It's not important what I like. That's not important. What's important is, and I tell my audience, what's the next buyer is looking for? Because that's how you know if it's a good deal. And what's your exit strategy?
Yeah, I mean, if you're dealing with some issues today and you recognize that, more than likely the next buyer is going to see it as well. And it could be even worse. I mean, for instance, if it's older properties only get older, right? If
Right,
you hold it for 5 years, mechanical systems get older, roofs get
right,
older.
right.
So
By the way, we
yeah.
don't care. We don't care. 60, 70, we don't care. Because if the price is right,
Yep.
I mean, and again, we're not looking to Class A property. You're looking to hold down for like 5, 7 years, maybe even more. When it's a newer product, something in the 60 or 70, you buy, you put some lipstick, you put it back in the market.
Yeah. Listen, I think that there's opportunity for any vintage asset. I mean, there's a lot of interest right now in newer product just because there's so much of it being built. But you and I both know there's plenty of older, well-located product with, great upside today. And it's a little harder to come by. But that's why you got to just be in the market, talking to everybody, and those deals are still out there.
You have to be in it to win it.
Right.
I'm gonna tell you a little
Yeah.
story. I'm gonna tell you a little story, okay? This guy goes to church on a Sunday and he pray to God. Dear God, please let me win the lottery. Sunday come in, doesn't win the lottery. Monday comes in, doesn't win the lottery. Tuesday come in, he doesn't win the lottery. Wednesday, finally, there's a little voice comes out from the ceiling, is telling him, John, you gotta buy a ticket. Get it?
It's
You
pretty
gotta
good.
be in it to win.
Yeah. Right. Right.
Right? So that's exactly what. Yeah, I agree with you. I sometimes, including me, I'm not gonna lie to you. Buyers feel intimidated when they make an offer for market deals because you don't know what the next buyer. Let's say my deposit is 300, another guy is 400, or mine is non-refundable. Another guy is like $1 million non-refundable. Meaning different things where you can always have you may not have the edge, but you know what? You gotta be in it. When it comes to market deal, I always tell people give your best offer, and that's it. You did your job.
Yeah, listen, I think that for us brokers, I mean, we're talking with, thousands of clients. And so, even if you're a newer investor, if you're bidding on all my deals, I know
Right,
you.
right,
If you're
right,
discouraged, you're not bidding,
right.
I don't really know you. I don't, we want buyers, really want to be known by the brokerage community as active. Now listen, if you're lowballing every deal of mine, that's a different story. But
Right.
but if you're kind of in the mix, you're competitive. Um, we're going to get to know you. And, we've grown with a lot of clients over the years that, started off like that. And, they went from the bottom of the stack to the top of the stack
Right.
and preferred clients.
Hey, don't be afraid to share the experience with the audience with me.
Yeah.
How was your
Yeah.
experience? I know it's
No,
you
I mean,
crazy.
you were always a seasoned buyer since I've known you, but definitely, yeah. I mean, there's a lot of buyers out there, and not all of them are doing the right thing.
Right, right. Because they just sign contracts and they don't show up to closing.
Yeah, they'll tie you up, or they'll submit terms that are not really market. I mean, not expecting everybody to be hard day one, but we can't have 60-day due diligence and 6-month
All
closings
right,
and
right, right. 'What do you
50
see?
grand deposits.
Right, no, no.
Yeah.
For a typical deal, let's say $20 million, 25 million, $30 million, what kind of deposit do you see out there? And do you see any refundable and non-refundable deposits right now in today's environment, 2025?
Yeah, in today's environment. Listen, I think we probably like to see, 1-2% deposits for the initial and the second after the due diligence. Those are really starting points. I mean, depending on how competitive the deal is, I mean, it can get up to seven figures, and that's for, initial and second deposit. Hard money, I mean, it's not as prevalent as it used to be a few years ago, but we are starting to see that come back. There's always a buyer or two that's, trying to differentiate themselves, and so, their offers are including some hard money. Even if it's just a little bit, it's better than nothing. And then we're probably more so seeing, quicker due diligence timeframes, less than 30 days. Um, I think we're starting to, feel more competition out there, and so buyers are recognizing that and, trying to win the bid
Right,
and come in on good price and good terms.
got it. Well, what do you think about the administration, Donald Trump, and everything? That's good for real estate, right? I would think.
Listen, without getting political, there's a lot of major swings right now, which doesn't bode well for anybody. Um, so, I think the Treasury swung, 40 pips yesterday. So that's incredibly volatile. It's hard to, really pinpoint where you need to transact in this kind of environment. So from that standpoint, I really don't like the volatility of what's going on. I mean, hopefully the dust settles here, after we kind of get a better picture of what these tariffs are really going to look like
Right.
after, negotiations with some of these countries. But, you know,
It's
if,
tough.
if interest rates come down, that's good for us. But if people feel like the economy is crashing and the world is ending, that's not good for us. So there's a fine line there
Well, it's
with
never good.
everything
It's
going
never
on.
good to panic. It's never good to panic. You gotta take a
Right.
day off. Take 2 days. Okay, take 3 days. Come back. Okay, the panicking. That's very bad for anybody.
Yeah. Yeah, I agree. I mean, we never make kind of knee-jerk reactions in this environment. It's always let's wait and see. At least, hear, what everybody has to say within, a week or so. It kind of feels like we should be day traders in this environment, but real estate's not like that. It's definitely longer term, and it's got some volatility, but it's definitely a lot more predictable than the stock market, if you will.
Right, right. And what do you think about rates for this year? Interest rates going to continue to go down or stay the same?
Yeah, we're not
What do you see
necessarily
out there?
expecting any major drops. We were expecting, 10-year treasuries to probably be somewhere in the upper threes, low fours. Seems like that's starting to play out. You've got some wild cards with inflation, and what the Fed's going to do as a result of, potentially inflation being sticky going forward, and what tariffs are going to do to inflation. So, there's a lot that still needs to unfold here, but, we're not expecting any low interest rate white knight to come save the day.
No, of course not. Right, right,
So
right.
I think kind of where we're at, with all-in rates, upper fours, low fives, that's probably what it's going to
Good.
be for a bit. Yeah.
But for bridge financing, it's like 7.5 to 8, right?
Yeah, it's still higher, although, those spreads are coming inside too. So bridge is starting to become a more viable option for a lot of our clients. Um, Now, it's more on the value add deals, or, you
Mhm.
know, uh, certain pre-stabilized kind of opportunities, but we're starting to get a lot more interest in bridge again.
So for the 60 product and 70 product, I would say bridge, right? People want to
Yeah,
be
if there's a value add story
right.
there and you're not just kind of buying in place cash flow, then it's definitely something to explore. If it's a stabilized deal with not much upside, probably the agency execution makes more sense.
Right. And how do you get your client? Repeat business is the key, obviously.
Yeah. How do we get our clients?
Your listing, for example, a good listing, 300 units, 250 units, nice size community where obviously for you, I would imagine, okay, it's easier to sell, to market a 200 unit as opposed to a 50 unit.
Yeah, we really don't do much under 100 units.
Right.
And, just recognizing that the buyer pool is, much different for anything 100, really 200 units and up. You start to get more of the players, the institutions,
You
the
want that, right?
Exactly. It's in our opinion, scale brings about a larger buyer pool, and
Mhm.
that sweet spot, kind of around 300 units, is definitely where we try to focus most of our efforts. So to answer your question, how we get our clients, I mean, it's years and years in the making. It's, a cold call,
Okay.
15 years ago that we've just been
Agreed.
continuing to
Agreed.
develop a
Agreed.
relationship with the client, and hopefully we're the ones that get the call when the time comes to sell.
Right.
But going back to our conversation earlier, it's all relationships, and rarely do I ever call somebody, and on the first call they tell me they're a seller. Like, that never happens,
Do you
or
still do
rarely happens.
cold call or your team?
Believe it or not, we do.
It's okay. Hey, listen,
Yeah.
I look up to you. It's okay. You know what?
Yeah.
You got a fire in the belly.
Yeah, there's lots of new players in the market. I mean, tons of new developers that have entered Florida. So a lot of times it's a new call, and a first time call. But we've got a lot to talk about. Obviously, we can let them know everything we've done in the market, and the beauty of working for a national brokerage shop is, usually a lot of my colleagues have worked with. Clients that are new to Florida. So it's pretty easy to connect the dots.
Most of the buyers are from New York, right?
Yeah, I mean, a vast majority does come from the Northeast, but, we've got plenty of clients from around the country and around the world.
That's nice. No, wow.
Yeah, California, Texas, we have a good amount from Canada, South America, Israel.
Right. So you feel like people, other country like blue, right? Like blue states or blue country for that matter, right? With restriction on landlord, okay, they like to come over here, where Florida is very open market, right? Very favorable for landlords.
Yeah, very business friendly climate.
Right.
Obviously no state income tax, no rent control.
That's beautiful
Um,
thing. Right.
and the policies put in place by a lot of the municipalities are very pro growth, and
Right.
so investors have been really attracted to that. And I think post COVID you really saw that mass
Right.
influx of investors looking for that as other you know states were on lockdown, and
Right.
more restrictive policies and
Oh yeah.
such.
So you feel like I feel the institutional buyers are very picky, if I may. Number one, they will need more than one signature. Oh, what happened? Oh, oh, I'm sorry. Can you? I'm sorry. Number
Yeah,
one,
I got
they
you.
yeah. Number one, they need more than one signature to execute. Number two, they may take longer. And number three, they're looking for newer product. So for 1960 vintage or 70 vintage, I have to think that I have to believe that your buyer pools are a mom and pop or right individuals.
Yeah, institutions have, really been on the sidelines the last few years. They are coming back and more competitive. And to your point, they are looking for typically newer built products. So I think that presents a pretty good opportunity in the value add space. I mean, don't get me wrong, there are some institutions that are definitely looking for value add, but for instance, this, 60s, 70s vintage example you gave, I mean, they're really not touching that.
They're not
So,
touching that, right?
um, yeah, so it presents an opportunity. It's a smaller buyer pool. It's typically all private,
Private,
investors groups. And so, um, I think that's why we've seen the cap rates on those kind of deals, increase over the last couple of years, amongst other things, of course.
right. But I feel like those institutional buyers, even post COVID, they're always looking for something newer. Sometimes they look for Class A property. So I feel like the Class C property, right, solid C, are different clientele altogether.
Yeah, definitely a different buyer pool. We've kind of known certain buyers to pursue that older vintage product, and I know you and I have done a lot in that space. But it's definitely a sector that goes, under the radar for the
Right,
institutions. What's interesting though, even though the institutions are looking for newer product, I think they're starting to chase yield again. So really the only way they can, get that in today's environment is going after core plus or value add. And so it'll be interesting to see, what they're willing to go after. Usually they have thresholds for the year built. I think they typically want to be like 2000s and newer. But that presents tremendous opportunity for anything older than that,
right.
where it's still not the 30, 40 buyers that we were seeing in 2021 and 2022 for value add older vintage deals. We're still not back to those levels. So definitely good opportunity.
Remember, you only need one buyer.
Right. We've been in that situation many times.
Right. And you know what? And I feel that the Class C are easier, okay, to raise rent. Easier because Class A, it's a different clientele, different type of product. The rent is already high. And not to go even higher, okay, it's that much more difficult. You can, but it's a very, let's put it this way. Class A, it's a very slow moving vehicle. A Class C, it can happen fast. And therefore you can also exit fast.
Yeah, and you can also improve a property so much that you change, the renter pool, the demographics,
Right,
by doing the right thing, the right renovations, and of course raising rents.
right.
So yeah, definitely easier to do in the B and C space, whereas A, you're pretty much at the top. There's not a whole lot of room to grow to increase rents besides what the market is doing.
And you have it's a cash flow that okay, and you hold on to it for. I believe overall it's only going to appreciate because at the end of the day, it's multifamily. And
Right.
what does multifamily does? Always appreciate because you're in a red state, and people, like you said, people always need a place to live.
Right.
Right.
And Florida's really benefiting from all the population growth and job growth, and so
What do you see
it's
Florida in the next 5 years? I see it. I see the trend going to central and north. What about you?
yeah, we're continuing to see a lot of population influx into Florida, but in migration, we're seeing, kind of what I mentioned before, folks from South Florida going to maybe a cheaper cost of living market like Tampa or Orlando or even Jacksonville, and maybe some of the tenants that were already in those markets, they're moving to the outskirts, a little more suburban. So, markets like Lakeland and Davenport, Apopka, Pasco County,
Secondary
you
market
know,
and treasury markets, right?
yeah, so they're starting to kind of move out to maybe get a little cheaper rent, and maybe there's a little more interest in living suburban because it's getting so populated in the cities. So, that's interesting to see play out as well.
Well, as long as Florida going to continue get new people every year, year in, year out, okay, you're safe. We're in the best place in the world, I would say.
Yeah, I think we're in a great spot, and it's going to be really interesting to see the next few years. Florida's biggest problem the last few years with rent growth was really we built, so much new supply that it caused some softness, and there was a trickle down effect where you build all this Class A, and then they're all battling it out, dropping their rents,
Hmm.
offering concessions. Well, that has an effect on B and C a little bit, right? Just as it kind of trickles
Right,
down.
right.
Um, but now that we're kind of past the supply peak, which we think was fourth quarter last year, demand is going to start outpacing new supply. And I think it's going to lead to another period of growth here in Florida in 26 and 27.
And by the way, I love if when I own property, let's say B and C, and there is a brand new property, Class A, next door to me, literally next door to me, I love it.
Yeah.
What does it mean for me? More business.
Yeah, exactly. I mean, those properties serve a different tenant base,
Exactly.
but it definitely improves the neighborhood usually,
Right.
just kind of having a higher
Right.
paying tenant there.
And I want you to tell the audience how to reach you.
Yeah, so my email is Mike period Donaldson at cushwake.com. My cell phone is 727-946-7611. Feel free to reach out to me anytime. We got a lot of inventory right now and a lot to talk about. So feel free to reach out anytime.
And for those of you who don't know Mike, Mike is the top producer in Central Florida, multifamily. We're not talking $1 million producer. We're talking about $1 billion with a B, a few billion with a B. And I'm very proud of you. And I've used Mike in the past, and I intend to use you again.
Appreciate that. Would
And
love to do another deal.
thank you very much. Thank you for coming.
Thanks, Eyal. Have a good one.
You too.
Bye.